Welcome back, guys. In this video I want to be talking about one of my textbook favorite setups called CVD absorption. I want to be talking about how I identify it, how to use it. If you haven't heard about CVD before, don't worry, I'm going to get that covered for you right here. So without wasting too much time, let's get into it. All right, so what is cumulative volume delta? Definition of CVD, all right, is a metric used in trading to analyze market dynamics by tracking the net difference between buying and selling volumes over a specific time frame. It offers traders a window into the prevailing buying and selling pressure, revealing insights into the price movement dynamics influenced by supply and demand shifts. Okay, a little bit of a complicated definition there, but don't worry, in simple terms it means when there is more buying than selling, the price of the CVD, the movement, the line that we see on my charts, should go up, and when there's more selling than buying, the line should go down. Keep it very simple. That's how it should behave in an ideal world. However, we spot divergences. This is what we call absorption. All right, now I want to show you what a CVD absorption looks like. Okay, so this is what we call absorption in a uptrend. All right, so the price is moving higher, we get a pullback, we get a lower high on the price, but we get a higher high in the CVD. All right, that means there is a divergence between the price and the CVD. In an ideal world, this CVD should be following the price, but the CVD is made a higher high. That means there is a limit seller here absorbing all this buying pressure from the CVD. All right, the CVD is moving aggressively higher, but the price isn't. That means there is a limit seller absorbing all this pressure. And that is a heads up that there's absorption here, and we can potentially look to go short on the market. The opposite, in a downtrend, price makes a low and then makes a lower high. Okay, however, the CVD, it makes a lower low. Okay, so that means there is a passive buyer sitting here absorbing all the CVD pressure. Okay, doesn't let price go beyond this low, and then we get a nice move in the opposite direction. That's a heads up, there's absorption here, and we can look to take the market in the opposite direction for a potential long setup. Guys, what you have to remember, you will see CVD absorption at random levels on any given day. Okay, that does not mean every time you see absorption or exhaustion, you take a position on the market. No. Number one thing first, what you must do is you must identify key levels. That's the most important thing in trading, identifying key levels. Once you identify key levels, at that point you have to stay patient and wait for the price to develop and give you a signal. It doesn't happen all the time at key levels either, but if it does, it happens at a key level, you have to stay patient. You have to wait for the CVD to develop, you have to wait for the price to develop at that key level, and then you can take the position, whichever it is, short or long. I want to give you an example of both here right now. Okay, so this is a chart of NQ. What you can see, we aggressively sold down. We're coming into an area of support. So my key level here was the point of control, right? So you can see the point of control. Let's zoom in a little bit. So we hit the point of control, we moved out. All right, let's have a look at this. So hit the point of control, moved out, we came back, we didn't take out this low. Okay, we made a high low on the price. So you can see this key level is getting respected. We already got a bounce from it. We came back, we retested the point of control. Now let's go over to the order flow and see what happened here. All right, well, this is the price action that I'm talking about. So as you can see, the price makes a higher low, the CVD makes a lower low. That for me was confirmation that there was absorption here at a key level, which was the point of control. Fantastic setup. We can take this market long. All right. Not every single setup plays off the point of control. That's not usually an area that I like to take a trade. However, if I see absorption or exhaustion at that level, then it becomes a very relevant key level. Okay. Usually I like taking positions from value area highs or volume ledges from the high or the bottom of the volume ledges. I'll cover that in a separate video, but usually it's value area low or value area high. those are your best risk to reward setups. However, point of controls can also be very, very powerful when you see exhaustion or absorption at the point of control. Now, I want to show you a possible short setup. I didn't take this one, but a possible short setup that you could have taken on this same day on NASDAQ futures. Have a look at this. So over here, as you know my trading style, we have a ledge here, guys. Okay, this is a volume ledge, and I usually like to take short trade setups when we get to the top of the volume ledge, okay, or the bottom. All right, either or. If I'm looking for a short, it's got to be at the top. If I'm looking for a long, it'll be at the bottom. So this time we get a nice massive aggressive move into that top of that ledge. Okay, so you can see here we get the rejection. So that shows, number one, my level is being respected. Now so this type of strategy requires a lot of patience. We retest that key level. Okay, so that's the point. We retest it, we make a lower high on that key level. Now look, let's have a look at the order flow, what happened here. All right, look at this. We make a higher high on the CVD and a lower high at that key level, my ledge. Okay, we have a higher high and a lower high on the price. So that means there's a limit seller absorbing all this buying pressure. You can see all this positive delta here, all this green, these green bars, really aggressive, but the price is failing to move higher. That means there is a big seller absorbing all this, and then we get a massive flush, right? Massive flush. Okay, I didn't take this, but that is an example of a potential short setup, how we use absorption to identify potential short setup on CVD. Guys, I hope I have explained how I use absorption in the market. It's been a short video, but I wanted to make it very precise. There is other ways of using absorption as well and exhaustion in the market. I will show in subsequent videos how I use CVD in more complicated ways, but this was a taster, a beginner lesson on CVD and how I use CVD to mark absorption and take high probability setups in the market. Very powerful tools. This is why we use footprint. This is why we use volume. This is why we use CVD, because CVD is based off volume. All right, so thank you for watching. If you liked what you saw, please hit that subscribe button. I thank each and every single one of you guys. Thank you for watching. See you in subsequent videos. Peace.